Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade Newsletter. Hope you guys doing well and ready to go for another week of trading. Man, I think I say this every newsletter, but time is flying by fast in 2020, right? We just started, and then now we're in May, and then we're June, and now June's almost halfway done. I mean, time's flying by fast. But that being said, let's just dive into the markets. So, I think now you guys probably understand why in last weekend's newsletter I was like, I don't want to go long. Did you guys remember that? Like, I was like, I think the market could go higher, but technically, this is a place where I just don't want to take any long new swing trades because we are extended. We're approaching, this resistance level from where the move started, right? This is where the down move started here. And we came back up there. So I was like, I don't want to go long here. Multiple green candles in a row, extended from the moving averages. So pullback is on the cards. So, those were my comments in last weekend's newsletter is to watch for a pullback, right? Watch for a pullback. Be careful. If you took some long-term investments down in here, not a bad idea to take some profits, right? If you're in some long trades here, again, not a bad idea to raise your stop or take profits and look for shorting opportunities. So, we got that decline last week as we spoke about. Thursday, we gapped down and we got a pretty big red bar going right into the 200 period moving average. And then on Friday, we got, a gap up, but then the gap up sold off hard and took out the prior day's low, right? So we were looking really weak. But towards the end of the day, we started climbing our way back up and closed with a little tail. So now, where do we go from here? So, big scheme of things. So big picture, if you look at it, I mean, we're, we could be starting a leg lower because you look at the weekly chart, you get a big red candle on a weekly chart, which, in a way engulfed the red candle. And we got a, sort of like a sell setup, so to speak. So that's what we have over here. When we take a look at the monthly time frame, you can see here, monthly chart, we've left the topping tail here. So, but the good thing about what Friday is that Friday gave us good levels, right? The good levels meaning it left a tail, which gives us, level to watch out for. So basically, now for next week, if as long as we stay above Friday's low, we're fine. I mean, we could probably go right back up again, just like we did over here, right? So if we hold Friday's low, I think we could probably go right back up again. However, if we take out Friday's low, then basically I don't see a bounce coming until the 50-period moving average, which is about 290. So that's where I would say, if we take out Friday's low, we're probably going to go towards 286, 290. Or if we take out Thursday's high, then probably I think we're going to resume the uptrend and probably test, the all-time high. So like simple levels to watch for. All right, Friday's low. If you take that out, probably going to go lower. If you take out Thursday's high, the red candle's high, we're probably going to test these new highs territory. Okay, so that's where we stand on as far as the spiders is concerned. Take a look at the NASDAQ using the QQQ, same thing. Q's actually already made a new all-time high, but then we gapped down and left a big red candle. So that's usually not bullish because not only did we gap up and left this green candle, and then we gapped down the next day. So this is, in technical analysis, it's called like an island gap reversal, right? Where we kind of gapped up and then we gapped down right after. That's usually called an island reversal, which is a bearish sign. However, Q's, I will say the same thing as the spiders, right? Friday's low is an area to watch. You take out Friday's low, you're probably going to go down into the 50-period moving average. If you take out Thursday's high, then all-time highs continue to the upside. And the reason I say that is because you notice here, even though the Qs peaked down, they held that 21 EMA, right? That same 21 EMA which it held, over here, over here, over here. So there's, it could absolutely do it again and continue its uptrend. Moving averages are nicely sloping up. So that's why Friday's low going to be key area to watch. If it holds that, we could probably go right back up again. If we break that, we're probably going to come right back down. So that's where we stand on the NASDAQ. Taking a look at the US dollar. US dollar I spoke about in the previous newsletter and the one before that as well. That watch this consolidation. You break that consolidation, you're going to go lower. The US dollar went lower. And, you can see here, as the US dollar went lower, commodities were grinding higher, right? You look at gold, same thing. Gold came right back up towards the all-time high. You look at silver. Silver's again continuing its all-time high. Not all-time high, but like continuing towards the recent highs. But what's interesting here is that the dollar on Thursday and Friday, started to look like it wants to bounce. If that's the case and we're gonna bounce, then gold, silver, oil are probably gonna pull back lower, which also means it's gonna be not a good impact on the market, right? Not a good impact on the market because you can see how when the dollar was dropping, right, the stock market was going higher. But now that the dollar is bouncing, the stock market's coming in, right? So that's called inverse relationship, right? Inverse correlationship. And that's usually because, again, if let's say the dollar is expensive, right? So the foreign investors, let's say you're from China, you're from Japan, you're from India, right? You're from Russia. You want to buy U.S. stock market. Now, if the dollar is expensive, you're going to have a harder time to buy them, right? Because your currency rate is going to fluctuate. But now as the dollar goes lower, then international people are like, hey, dollar's cheap. We can actually put our money in the market and not get hurt by currency rate. So that's why, when the dollar goes lower, market goes higher and vice versa. All right. That being said, let's take a look at Aussie dollar, Japanese yen. This is AUD JPY. So this is a trade that we actually did in the Forex room where we shorted Aussie yen right into resistance. And then we got the move down lower, right? And you guys know how related the stock market is with the Aussie yen, right? Again, take a look at it side by side. And you can see here, Aussie yen went up, stock market went up. Aussie yen started to pull back, and then the stock market also started to pull back. So they look very, very similar here. Okay, so that's kind of where we stand on the big picture. Not a lot going on. As far as open trades, we literally have 0 open trades right now. We are in nothing, no open trades, no open position in the newsletter. However, I'm kind of disappointed with, just how last week, the timing, right? Like I was pretty much spot on the market, expecting this pullback, and we got exactly as I talked about. However, I guess I was a couple days early. Remember, we were taking some short trades. I shorted this BDX. I know some of you guys got lucky because some of you guys never triggered on that first day, and then you got triggered on the way down, so it got you a profit, which is nice. Some of you didn't follow the newsletter rules, right? Which says if a stock takes out the stop loss, it's canceled. You still kept your order in and it worked. Now, hey, you got lucky. That's awesome. You made money. Congratulations. But, for me, I actually took this trade and I stopped out on the same day, which was this green day you see here. So you see that low? It actually peaked a little bit below, got me in the trade, but then it stopped me out the same day. So I was stopped out on this. I took a loss on the BDX, but, now it's doing exactly what we talked about. So, again, spot on the analysis. Just my timing, I guess, was a couple days early, and that look at how much difference a couple days make. Just a few cents early, stopped, and then it finally worked exactly as we thought it would work, right? But that's that. I mean, now I'm no longer in it. Nothing we can do. FGen, on the other hand, was another trade I took on the short side. Same thing here. It triggered, looked really, really good, but then it ended up stopping me out. And this one's actually continuing to go higher. So, hey. And that's why we say, thank you, God, for stop losses, right? Because if stop losses weren't here, I mean, look at that. So, those are a couple of trades I tried taking short positions on. Didn't do it for me. No harm done, no foul. It is what it is. And but the good thing is same thing, because the market pulled back. Imagine if I called a bunch of longs. We would have stopped out there too. So regardless of what we would have done, we would probably taken stop losses, which is, makes me feel comfortable. And, that being said, let's just dive in and see what we got going on. So for this week's newsletter, I got 3 trades for you on the long side, surprisingly, right? And why on the long side? Well, my thinking is this. The long side, because yes, we got 1, 2, 3. We got 3 red days in a row. Okay, so that makes me feel comfortable about going long rather than last week where we had multiple green days in a row, So now we got multiple red days in a row. I feel comfortable calling longs because here's my thinking. Let's say the market continues to go lower, takes out Friday's low and goes lower. That would mean our long trades that I call would probably never even trigger, which is great, right? They won't even trigger. But now let's say the market does start to bounce higher, then those long trades will trigger. And, that's kind of my thinking behind that. All right, I have a few ideas too, but there's only 3 that I'm going to call. So one of them I'm going to call is PTE, Polaroid Inc. So Polaroid Inc, I mean, you can see here a stage 1 base going sideways. And, on this day here on 10th June, it tried to break above the sideways base on nice volume. And then it tried to go lower, but then it came right back up. So we got a couple inside days here. So I'm gonna go long above $1.39. So let's say $1.40. We're gonna look to do it long. We're gonna place our stop loss about $1.12. Okay, we're gonna place our stop loss over here. Entry would be $1.40, and we're gonna look to see if it can run up into the 200 period moving average about 225. Okay, so that's gonna be the PTE trade, looking for like an uppercut pattern to go to the upside. And the next one on the list I have is a biotech stock, IBIO Inc. Okay, so IBIO, had a crazy move from 30 cents to like $3.40, came all the way back down, and it's been trying to go back up. But what I like about it is that recently it's been forming a nice little consolidation, right? Nice little consolidation. So it makes me think that if we can get above that consolidation, right, then I think it might try and make another move to the upside. So that's something that I'm finding interesting. So I'm going to be calling that as well on the long side. And again, you take a look at the weekly chart, take a look at the monthly chart. Also, looks like it wants to try and make a move to the upside. So I'm going to try and do that long. And then I have another biotech stock, which is VIR Biotechnology. So similar to IBIO, I mean, gone crazy with the whole coronavirus situation, went from $16 to like a 76 bucks. And then it came down to about 28, and you can see here the buyers are continuously supporting that price around 28 bucks. And then most recently, the buyers are supporting it around 32 bucks. So the buyers are stepping up a little bit. And what we also have on the time frames here is that we have sort of like a potential like a downtrend line here. So if I draw a line like this, it becomes like a wedge pattern, right? So if it gets above this wedge pattern, gets above this 37 area, I think it could try and make a move higher. So that's what I'm looking for on VIR, and that's going to be the third long trade that I'm going to call. Okay, so we got 3 long trades for the newsletter this weekend. We got IBIO that I'm going to look to go long. I got this VIR that looks really, really good, and then I got this PTE. So those are the official trades. Some unofficial ones that I'm keeping an eye on as an idea for you guys is Momo Short, MOMO. Short under $19, looks pretty interesting. Right, stock's going down, consolidating at the low. So under 19, this is very interesting on the short side. So that's one I like. I'm also keeping an eye on Sage, SAGE. If it gets above $42, $41.50, that's a pretty good one I'm keeping an eye on. And then a few more I have for you. One of them is BTU, Peabody Energy. If it gets back above $4, that one's interesting to maybe try and make a move higher. And then all the marijuana stocks are very interesting, like ACB, right? ACB gets back above $16.50. That's very interesting, right? Then there's Tilray, TLRY. If this thing can get back above $11, that one's an interesting one too. And then we have another, Medley Management, MDLY, a little penny stock. So be careful on these things. But if it gets back above 75 cents, looks very interesting to make a move higher, MDLY. So those are some of the ones that I'm watching, but I'm not officially calling them because the patterns are not that clean, so I'm not that confident in that. So those I'm going to wait for, but I do like, right? Like the marijuana stock, especially TLRI and the ACB, if they start coming back up, they're definitely my top watches, is what I would say on that, okay? Another interesting one that I kind of find a little bit interesting here is CHK, Chesapeake Energy. This is a weird one because this thing went from $16 to like $72 and came back down to like 19. So something weird is going on over here. So I would be very, very cautious, and that's why I'm not trading it right now because this is a weird one. But ideally, if it gets back above 28, definitely keeping an eye on this one as well. But for now, those are the 3 that I'm going to call. All right. So that being said, let's take a look at what we talked about last week. Right, last week's newsletter, we talked about market internals, and that's one of the indicators that I used to say, hey, market could probably pull back. If you guys remember, you can go back and watch last week's newsletter. But if you remember last week's newsletter, I was saying, hey, be cautious, guys, because the market internals, the McKellen oscillator, is at a 200 overbought reading, right? Not a time to go long. And look at what happened from here, right? Overbought reading, boom, big red days in a row. Just like here, we got oversold readings, and that's what I helped pick the low, So some of the things you got to keep in mind as far as the markets are concerned. Market internals are playing out, and market internals again suggest the same thing, which is If we take out these lows, we're probably going to go test 290. If we get above these highs, we're probably going to continue to make new highs. So that's where we stand on the internal side of things. Talking about financial sector, some of the things I look at for the market, not a good sign at all, right? So usually financials lead the market higher or lower. And you can see that financials started giving it up way before the market gave it up, right? Financials started giving it up around 8th June, where the market didn't start going down until 11th June. So financial gave us a heads up that the decline is going to happen. Similar thing with the transport sector. Look at the transport sector, IYT. Transport sector is a good indicator of the economy, and you can see here transports indicator also started going down well before the market did, which gave us indications, right? Another thing I look at is the small cap sector ETF, IWM, right? IWM, and I explained why I look at it, because if the IWM is going higher, that means the small cap stocks are going higher, which means people are more comfortable in this market putting money in the market. They're willing to take risk, which shows confidence in the economy and the market, right? But if the small cap sector is not going higher, or is maybe going lower, that tells that, hey, people are becoming more risk averse. They don't want to take risks. They're not confident in the economy, right? And you can see here, the small cap sector also started pulling back much below the market, giving us a good heads up. All right. So that's where, small cap sector, financial sector, transport sectors, then you look at it, the currency pairs, market internals, those are some of the, things I use to make my decision on where I think the market's headed. And it's a good idea for everybody to do that, right? But again, if you're new, your first goal is to learn the patterns and the strategies and all of that good stuff. And then you can dive into market internals and things of that nature. But to be honest, your biggest, if you want to learn something, better to learn the patterns, tactics, strategies. Market internals are just like, they give you an added bonus, an added boost, right? But they're not necessarily needed or required, right? The pattern overall, the charts are much more important, okay? So that's where we stand on that. So we talked about gold, we talked about dollar, talked about the silver, we talked about different, we talked about Aussie yen, different markets. One thing I do want to talk about is the bonds, TLT. So, I feel like getting back in this. So this was a good trade for us in the newsletter. We shorted the TLT bonds right over here. We got out pretty much as a perfect exit as well. And now we're back up, and it's starting to look to me like it's a sell setup. So I'm going to keep a very good eye on this, TLT, because again, you can notice here, lower high, lower high, lower high. So if I connect that forward, basically we got our downtrend line, right? So if it starts coming lower like this, I'm going to keep an eye on it to maybe short it again, right? Put our stop loss over here and then look for a move back down into the 200 MA. So bonds, I'm definitely watching on the short side, but I need a better entry pattern to set up for the same, okay? So that's where I'm standing. Also, all the long-term trades, if you recall, this is again something I mentioned in last week's newsletter. All the long-term trades I called, like Dow, BA, Uber, EPI, PIN, all the long-term, have done a phenomenal job. But if you recall, I mentioned in last week's newsletter that, hey, if you took those trades, time to take profits, right? So I hope you guys did that, so you don't have to live through this pullback, right? And in this pullback, you could probably use as an opportunity to buy it back. And that's why I recommend, people be active participants in their investments, right? I think a lot of time people think, hey, I'm just going to give my money to a mutual fund, or I'm just going to buy the market and forget about it. You could do that. Nothing wrong with that at all. And honestly, for most people who have a job, who have a business, they just don't want to learn, that's probably the best thing to do, is not trying to trade it and just, put your money in the market and forget about it. For most people, that's the right thing. But most people don't get rich. You gotta, you gotta think about that too. So usually, if you have the time, if you want to learn, usually the better idea, even for your long-term investments, is to be in and out, right? So, okay, you're like, hey, I'm in Delta Airlines long, I'm going to hold it. All right, we break support, right? So you could say like, hey, we broke support, I'm out. And then you're like, okay, we're holding support here. We're coming back up with moving averages. Okay, I'm back. Oh, we're extended. All right, let me get out. All right, pull back into support. Let me buy it back again. So that's how you really want to actively participate in your swing trades, because not only are your risk is going to be low every time, but you're going to get much higher returns. And that's why I personally am more of a fan of swing trading than just buying the market and forgetting about it, right? Because I can get better returns than that. So that's where we're at. Again, we're doing a pretty good job in the newsletter. I mean, if you followed every single trade in the beginning of January when we started this for 2020, I mean, we're doing a pretty phenomenal job. We're beating the market returns almost like by like 400%. So we're doing a pretty phenomenal job here. 2% risk. Even despite these recent two losses we took on BDX and FGen, we're still at 2% risk, making 40% for the year. And guess what? We got half the year still to go, and I'm pretty confident that we're gonna have a good run. Recently, we've been pretty quiet with the newsletter. We're just not doing a whole lot, and that's also because I'm waiting for the perfect opportunity. And you also got to think, hey, we're up quite a bit for the year. We want to keep some gains, and we want to build on that. We don't want to give it back. So that's another thing that I'm in at the moment. But that's that. Hope you guys have an awesome weekend. Hope you have an awesome week, and I will see you guys in the next edition of the newsletter. All right, just be careful if you're in any long-term trades or investments. Follow your plan, but obviously my plan, if you listen to it, would have got you out over there. And if you want to rebuy it, I mean, maybe wait for 50 MA. You could rebuy around 50 MA. That would be a good spot. All right, so take care, everybody, and I'll see you guys in the next edition of the newsletter. And I will keep you posted via email updates on the other trades that we're doing, like the PTE, the VIR, or IBIO. So we're going to keep you posted on that. So take care, everybody, and see you guys in the next email.